What's up, my fellow traders? Hope you all enjoying your weekend. And what a great week it was. After quite a while, almost every single commodities I've sent to my members or I've mentioned in my YouTube video, and most of the pairs that was sent to my members, reports, the trade alerts and the trades I personally took and I teach you here on my YouTube channel has been played out perfectly fine. If you're someone who is a patient trader, disciplined, then trust me, you have made some good amount of money last week. Doesn't matter the gold flew up like crazy, you still made money because of the condition I mentioned. Now I get this question asked a lot these days. That's why at the start of this video I just want to make this clear. If I'm offering a course, yes, I do offer a course. If you follow me for a couple of years, then you know that I have the course. If you are interested, that's totally cool. Right here, all you need to do is moneymarkers.uk is the website. You need to scroll down and here you'll see the premium plan. Right here, it's one time and lifetime access. With that you get standard and standard plus plan free as well with this plan. Just a one-time investment and it's lifetime access for you, and you'll get everything you need to become a profitable trader. Once you join, right here you'll see the page like this. You will see all the weekly reports here, and here you will see the course, the indicator you can download. Right here you need to click on MMTA course. It will take you straight to the course page. Right here you have all these lessons. If you scroll down right here, and all these lessons with the weekly guides where I show you the entries we had in the real market. And if you click here on the weekly reports, you have all the reports that you can download straight from your portals, and a market analysis is public and indicators are right here if you need to download all these indicators. So that is what you can get. And if you are someone who just want to join membership, all you need to do on this website, click on membership. It will take you to this page where you can buy the membership plans right here. And right here there's a third-party website, but you can, if you want to buy in dollars, that is a page where you can buy this plan. But the course is something you can only get on my website. Hope that's clear. If you want to join the course, that is cool. A good journey to become profitable. If not, make sure you subscribe, hit the like button so that you can get educational content with analysis every single day. Now I want to start with the commodities I've sent to the members. Almost gold, crude oil, silver, wheat, corn, all these commodities hit the targets, and I'm going to show you how nicely you can take your trades just by following some simple and very basic rules. If you just follow me on YouTube, you can easily make money just following just these rules. If you're a member, of course, you get these reports every week where you get these commodities, forex and indices report along with the trade alerts. And then we're going to go through analysis of net gas, gold, silver and crude oil. I try to do copper today as well if I have a good time. I want to start here with crude oil. This was the prediction I've done on my last video, that was public video on YouTube, and exactly how we predicted that if the price hit this level and form a pin bar or a 382 candle, the price will likely to push and head higher. And I've given you more than 1-to-1 targets. It is 1.4-to-1 target. Initial targets was 1-to-1, and I've clearly mentioned that we can still get a rejection at 50 EMA, and exactly after the price hit the targets, price formed a bearish engulfing candle. Let me show you a quick clip from my video so that you can't say that I did not say that, or you have no excuse of not making money. Well, crude oil is now forming a possible double bottom minor pattern, and if this candle turns to be a pin bar or 382 candle, in that case we'll have a buy signal, and I'm expecting a price to push up from here. First target will be 180, and the bigger targets, as you can see, that looks something like this, and price will likely to head higher from here. And from here we can expect a possible rejection at 50 EMA, and then we can see a possible major double bottom. Awesome. So if you watch me, if you watch my videos, not watch me actually, if you watch my videos, then you have the exact condition. It was a pin bar, and right here we entered live in my YouTube video, right? There was a trade that was shown in my live sessions to my members as well, as long as with you guys, and how nicely it rejected from 50 EMA, and that is something I'm going to cover in my analysis part of the video. But with that, I want to show you something here. Now, this was the report that was sent to the members exactly on 8th of this month, last week. Now, as you can see, the price hit my support area, and as you can see, I have mentioned that this green level is a valid counter trading zone, and that is why I'll be looking to enter a possible buy trades on smaller time frame. Right here, this was mentioned we did not enter here blindly, but when the price hit my zone, I did not enter my trade here. Yes, this was a condition that time. That was a minor zone, but that did not play out. But we had a major weekly zone that was mentioned in my live session as well with my members, and most of the members were scared that the price is gonna fall from here. There was speculation out there in the market, but I don't care about speculation. I don't listen to the noise of the market. That is what I teach to my students as well in the trading psychology lesson in my course, that do not listen to the noise of the market. Listen to your own analysis, what you have been trading from last couple of years. What I've been trading last couple of years, it is something I personally look at, and if I have a condition, I trade with a stop loss. Yes, if there's a news event, it hit your stop loss, you're out, but the odds are in my favor. If it's a weekly level with a pin bar, with a rejection area formed as a rejection area, double bottom, minor, and it nicely pushed up. Now that is what we call taking your trades with condition, without getting panicked, without entering blindly. So let's look at the next one. Next one we have wheat. Now right here, as you can see, the wheat zone was sent to the members. That price just broke above this level, and I'm looking at this price at this point. The level has been tested multiple times and a valid trend continuation, bullish area. Therefore I'll be looking to enter a possible buy trade. Now previously I've sent this level as a level of resistance, but that did not play out. It broke above. Now there was no entry condition, means no conditions, no entries, but instead it break above. Now we have a change of direction. The change of direction mean we are now looking at the opposite side, not fighting with the market. If the market is telling us that I'm broken above this level, now we are looking at the trend of the market. So we were looking at the trend continuation, bullish trades with the pullback, followed by this bullish candle, this pin bar right here. As you can see, the price pushed up nicely, hitting the targets. Now if you're someone who don't follow me in the group, or if you're not my core student, you can still use my zones, but if you want to implement your own strategy, that is also worth looking at, and take your trades at least with some sort of confidence if you are following me on my YouTube channel. Next up, let's look at corn. Right here, as you can see, we have corn. Now corn just hit the target. This was a report that was sent to my members, not this week, last week as well, but this week as well, as mentioned, had already pushed down, but this was sent last week to my members as well. Now looking at this big bearish candle right here, I was not comfortable entering right here, so we had a pullback right here. This was the area from where I want to enter, and from here it nicely hit the targets. The target was more than 1-to-1. As you can see, I exit corn because it is not one of my favorite commodity, but that is why I just want to keep it 1-to-1. But it would have hit 1.4-to-1 targets easily if you would have managed it, or if you have put a fixed target of 1.4-to-1 and nicely hitting the targets. Now that is what we need to do in the trading. We don't need to hang on with the trades. Once the target is hit, you need to get a better reward to risk ratio consistently, right? That is how you make money. Yes, if you're a beginner, go 1-to-1, get yourself trained, then manage your risk. Here, as you can see, nicely hitting targets here on corn. You see nicely waiting for this area to hit, and once the price hit this supply zone, the price nicely pulled back, nicely hitting the targets. As you can see, hitting nice targets, and this level was acted as a good level of support and resistance. And if you know how to spot these levels in the market, then your game of trades will go to the much higher level. That is why it is something in my advanced section of the course, and that is how I build my course in a proper structural way. Next up, we have natural gas. Now it is still running, and I'm going to cover this in my analysis part of the video, what to expect from it. But it was a zone that was sent to the members, and after quite a while, after a couple of weeks, I've sent zones for natural gas, because it is something I only send the zones if I see a possible opportunities out of the particular instrument, if the price is going to react from the zone. If there is no opportunity I see, I don't send these zones to my members. For my members, I spend extra time to mark these zones so that they know when to enter the trades. But if you are someone who follow me on YouTube, I also give you some good and basic information here on my YouTube channel, and this was also mentioned in my YouTube channel, but sent to my members as well. Right here, as you can see, it was sent for all three platform that we can expect some good reaction out of this zone. Right here, as you can see, on all three platform, it nicely pushed down, except from NEME. This is something I'm going to talk about in my analysis part, but nicely pushing down out of my zone and still pushing down. Now let's look at some forex pairs and the trade alert that was sent to my members. Now this was a pair, these were the pairs I've sent to the members every week, and right here one of the pair USD-CAD that was sent to the members. I want to show you quickly this trade. Right here, as you can see, USD-CAD was heading towards a level of major resistance, and as you can see, the price nicely formed what? And we were looking at this level for the possible sell trades. It nicely formed bearish engulfing pattern, and that was aggressive entry from the area of value as we had a news event. That's why I kept 1-to-1 targets for $CAD, and as you can see, it nicely hit the targets, exactly hitting the targets, and then pushed back up quickly. And if you are my student, you know that that was the exact target we set for this type of entry. For my entries, I have a different targets for aggressive entries, for pullback entries, for other entries which I teach to my students. Every entry has a different number of targets. I don't have the same targets for every entry, but that is why I have a code where you get everything as exactly how it should be in regards with stops and target. But it can still form a possible double top pattern. If we have that, I might go for another short trade using a bigger target like 1.4 to 1 reward to risk ratio. For that, I need to see a good rejection followed by bearish engulfing pattern or inverted hammers 382 candle, whatever you want to call it. Next up, we have this trade alert that I personally sent to my members, and I have taken some other trades personally, which I'm going to show you in a very short moment. But I want to show you this trade first. There was an entry that happened at the area of value. Right, if you see this level was a level of significance that I was looking at for my possible trades, and after the price hit my level, I just did not enter. I looked at my bullish engulfing pattern, a swing low bullish engulfing pattern. Yes, if you were late, the price gave you a chance to enter this right here and get yourself involved in a trade, and we got involved in the trade, and that nicely hit 1.4 to 1 targets. Initial targets was 1-to-1, but if you're a student, you know the targets for this type of strategy. Right here, nicely hitting the targets, and after that we exit your trades. Look for your next entry condition. Once you have a good reward to risk ratio targets, look ahead for the next trade. Try to make money from the other instruments. Don't hang on with the trades. Don't try to be in the trade forever. Yes, if you are someone who want to manage this trade, what I would have done, I would have managed this trade right here till here if I want to stay in this trade, but I've chose to exit right here. But that is absolutely fine if you want to manage it to the next level of resistance somewhere to this area. It still has a potential to push higher right here as I want to take some other trades. That is why I want to exit this trade. The other trades I want to show you in a very short moment, but that was absolutely fine. But in that case, what you need to do, move your stop loss to break even, grab this profit. Once the price pushes up, keep on moving your stop loss, keep on grabbing your profits on the way up to the next level of resistance. So that is what we took in the priority group with my members only, and that nicely hit targets. I have not sent many alerts, but this is something you guys need to learn. The way I send you these trade alerts, learn from it, from the pullback entries, from the aggressive entries. Right here, from last few weeks, I've been sending some aggressive entries, but if you look at my pullback entry, I've taken the exact same trades out of that. Let me show you one example of that. Now, right here, I want to show you this pullback entry I took with my members. Right here, AUD CAD. This was an entry I was taken with my members, not this week, a week before that. Now, I want you guys to look at this pattern carefully. A bearish engulfer that happened below 50 EMA, and with that, you get a description in the trade alert what I was looking at for this trade. Now, it was something I've sent as an alert. Not every trade I send as an alert, because it is not a signal group where you get buy, sell, take profit 1, take profit 2 signals. It is a group where you get these alerts that you need to learn and understand what I'm looking at for my possible trades. You don't even know these signal providers, where are they getting these signals from? They might be purchasing from somewhere else, selling it to you, and you guys knowing nothing why you are taking this trade. But I want to send you a screenshot of that so that you can see why I'm taking this trade. Now, looking at this trade, I want to show you some trades which I personally took that was not sent as a report, as an alert. Now, exact same entries right here below 50 EMA, right? And it is something I keep on mentioning in my YouTube videos. Right here, we had what? A bearish engulfing pattern, a swing high bearish engulfing candle. Now, it is not a bearish engulfer on here before I get lots of messages from my students, but I was looking at FXTM chart for this entry. Now, looking at the downtrend and looking at this chart, I know I use Owanda mostly for my course and for my students. keep looking at OANDA. It is something, my own personal decision. I want to enter this trade because it was a nice downtrend, and that is why I want to enter this trade looking at this chart. But if you're looking at OANDA, again, keep looking at OANDA, keep doing your testing on OANDA. That is totally fine. But if you're someone who are already profitable trader, you're looking at the nice trend and you're looking at this chart, because I used to trade with FXCM way before in my start of my trading career, along with plus 500 of course. So look at this bearish engulfing candle that nicely pushed down. I want to show you another trade. I want to show you this trade as well. Right here, the price below 50 and 20 EMA, followed by bearish engulfing pattern. Now that was absolutely valid trade. If you're looking here on OANDA, the price nicely formed a bearish engulfing pattern and nicely hitting my 80 pips target here on this platform. So that is how you can learn from my trade list, and that is how you can take your trades in the market. Now I want to show you one good trade as well before I continue. Right here, nicely hit my stop loss, not take profit this time. Now that was exact same pattern I was looking at. Price was below 50 and 20 EMA. Nice swing high bearish engulfing pattern, and that is what we call a reality of trading. Not every trade is a winning trade, but if you're someone who are learning from the group, if you're learning from the trades, and if you're taking the trades consistently, same pattern, then you will see some losses. But if your strategies are tested, you know that out of 10 times you are profitable. 6 or 7 out of 10 times you are still profitable. If you have 4 losing trades in a row, that did not hurt me because I had some other good winning trades. So that is a part of trading. It hurts, but that is what we call a business of trading, making easy money in a most difficult way. You need to do full analysis before you enter in a trade. Now lastly, I want to show you this trade, which is EURUSD. Now I know I used to upload a weekly guide in my course, but since I'm doing this weekend's video, that is something for my MMTA full course student as well. That is why I show you these entries, so that you know exactly what you are learning in the course. These entries are happening in the market every single day. Enter this trade, EURUSD, right here, and I'm going to show you that it is something I took in my real account. IC market is connected. Right here, I entered with a stop order. Right here, this was my entry limit. That quickly hit my buy limit order. That is how I took this trade. Right here and right here. Ignore this. It is something else I was doing. But right here and right here, that hit my profit. Now let me show you the sense of this trade. Now you often heard me talking about pin bars, 382 candles, and recently I uploaded a video how you can trade in a trending market, or how you can trade a trend shift. Now what do you have? A 382 candle right here. That was my entry, and that nicely hit my profit above 50 EMA. Now if you're my student, if you're my course student especially, you know the full rules of taking this trade. Once all the rules are met, only then we're going to enter the trade. I have very detailed rules of my every single strategy. Once the rules are met, only then we take the trades. Nicely hitting the profits, and I've shown you that it was taken in my real account as well. I quickly want to show you this pair that was sent to the members, and it is a zone I was looking at for my possible entries, and it is a trend continuation zone that was recently broken right here, and I was looking at some sort of pullback, and right here the bullish candle nicely pushed the price down, and that was a good push up. Again, like I said, if you don't follow my strategies, it is something you can do with your own strategies. Just use my zones for your extra confidence. Right here, 100 pips push out of the zone I've sent to the members. Then we had EURUSD, the zone is sent to the members, and right here, as you can see, the price is bouncing up from my zone. Barely hit my zone, but as you can see, it pushed up around 94 pips from the zone, almost 100 pips from the zone. So that is it for the first part of the video, and I hope that give you tons of knowledge. The reason I show you these trades, because I want to show you the potential in the market. I want to show you power of taking your trades with conditions, not gambling. Once you see a condition, once you look at these zones, you don't enter buy trades, sell trades looking at overbought, oversold situation. Overbought, oversold doesn't mean you start selling or buying. All you're looking at the valid area to enter your trades. And if you enter with the rules, if you enter with the strategy, if you're looking at the trending market, just take buy trades. If you're looking at the counter trades, and if you're still below 50 and 20 EMA, look at the valid area with signal of buying or selling, and only then take your entries. Hope you got a value. If yes, give this video a thumbs up before we move ahead to the next part, which is analysis of net gas, gold, silver, crude oil. Also going to go through copper today. Now right here, as you can see, starting with OANDA. Price nicely hit my level of resistance. That was a minor level of resistance, and right here, in case you are just brand new on my channel, this level is 2.339, goes to 2.441. Now, as price is nicely reacting from this level, I'm still expecting some more push down, at least till 50 EMA. Now, if you're someone who would like to enter this trade, what I would personally do, I would not personally enter straight away at this big momentum candle. I can either enter at the 786 retracement or at a pullback of 50% retracement for the better entry. And keeping my stop loss above and take profit can be 1-to-1 initially if you want to enter this trade at the pullback. Now this can push down straight away as well. I'm looking at this candle, a bearish engulfer. We can expect a good 1 ATR push down from here. That can be somewhere 2.213, or it can still hit 50 EMA. So what I'm expecting after this new high, if you remember, I've said that after the break of this level, we can see a possible pullback, retest of this anchor level before the price will likely to push up. And let me show you the clip from a last video so that we can connect the dots from there. So as you can see, the price nicely pushing up, respecting the anchor levels with a pullback. So right here, break of another anchor level, pullback followed by bullish. So as you can see, price nicely pushing up and still expecting a price to push higher. I'm looking at the level above. In case you are brand new on this channel, it is a level from where I'm now expecting some sort of pullbacks, not reversal but a pullbacks, which is 2.505 goes to 2.610, from where we can see some nice pullbacks, possible retest of this anchor or this anchor as well before the price will push high. I'm going to explain a possible retest of the neckline of double bottom in a very short while. Nice one. So as you can see, it nicely retested the anchor level that was mentioned on my capital.com as well, and after the retest it shoots higher. So coming back here on Wanda, as the price just made a new high followed by the retest of this level, what I'll be looking at after the price pushes down again, I'm expecting a price to push down from here. It could be a pullback and then the push down. It could be a double top pattern as well. These are the conditions I'm still looking at. I'm short-term bearish at this point. Again, not long-term bearish, but short-term bearish for that. I've marked my rejection zone, something like this. And what I'll be looking at, either a pullback followed by bearish engulfer for my sell trade, or once the price push down, hit 50 EMA followed by bullish engulfer, and then I'm going to go long till here. Exit, look for my sell trades if we have a condition. If no condition, if the price break and close above this high, means we are now heading towards the next level, which I'm going to mention in my upcoming videos. But these are the conditions I'll be closely looking at if we have a condition. Now, if you have a pullback, let's say you entered here, price falls, I'll exit above 50 EMA. If I have a bullish engulfer, I will enter, I will take my trade till here. Rejection, I will exit and take my sell trade by keeping my stop loss above and take profit below. If I enter my buy trade here, I'll use my 1 ATR, keep my stop loss below and take profit here. All I'm looking at a valid condition, only looking at the price just made a new high. After the push down, look for the buy condition. Now I'm only going to take my continuation sell trades if the price break and close below 50 EMA. If that happens, we'll have a very likely chance that price will come back to this trend line before the price will start to push up again, if there is no entry condition here. And if the price forms a double top, means we'll have a very strong signal the price is going to likely give us a deep pullback before it pushes up. So we are short-term bearish unless we see an entry condition here or once we are broken above this high. So that is what clearly I'll be looking at for my possible trade. So we are at the level of resistance, expect some good pullbacks and expect some good push down before the price will continue to push high. If you're looking at a daily time frame, we are broken above this neckline right here, which is a signal the price is going to push up in the long term. We are getting a cross of 50 and 20 EMA. 20 EMA crossing 50 EMA means in the long term, after the pullback, price will start to push up. But in this area, I'm going to take my sell trades as well if I see a condition either here or now. Currently we are getting a condition with a pullback till here. So these are conditions now I'll be looking at short term, but long term we are still bullish for natural gas. As long as we are above these highs, above 50 and 20 EMA, we are not bearish here on natural gas. I'm expecting the price to continue to push higher after some good pullback. Very important, with a good pullback I'm expecting out of natural gas before the price will push up, and the condition I've just mentioned. Here on capital.com, nicely pushed down. If you look here, a kind of double top pattern as well right here, that would have hit your targets. But if looking at the high time frame on 4 hour, expect some more pullback, could be till 50 EMA. And then if you have a bullish engulfer, exactly the same, then we're going to push up. Look at this major double top. If we have rejection, we're going to enter sell trade till we get a condition above 50 EMA for buy. Very important, we need to see a condition above 50 EMA to buy. Nicely formed a bullish engulfer and pushing up, forming another anchor level. So we're going to form another anchor level right here. All I want to see, a break above this anchor, and then a pullback, and then continuation towards the upside. For now, short-term bearish with a double top, or right from here, we can see a possible push down to 50 EMA. Here on EMEX, using some discretion, right here, as you can see, these wicks, that could be counted as a resistance level. So I'm going to just readjust my zones like this using some discretion approach. Now, the zone A is 2.408 goes to 2.524. All I'm looking at some sort of good pullback to 50 EMA. This could be 50 EMA followed by bullish engulfer. If we have a pullback, let's say you can see a pullback, then that is still a sell signal. Price will likely push down from here to 50 EMA. If broken below, only then I'm looking at this area. If not, if the price forms a double top right here, rejected, then I'm going to look for another sell trade, short term till 50 EMA, exit and look for the next entry condition. And then once we are broken above this high, we are looking at the levels above, which I'm going to mention in my upcoming video. So keep an eye. This is the condition now we're closely looking at. Remember, conditions are very important to take your entries. Next up, we have gold, a massive push up, and it is not something that we entered blindly. Now, let me tell you something here. Most of the traders out there, they were selling, looking at the price as all-time high. They might be selling here, right? Why? Because it is an overbought situation. That is a mistake, because they think if the price is so high, it's definitely going to pull back, and these are the candles that can blow up your account. But if you are a professional trader, you look at the market dynamics, you look at all the confluence in the market, and what we had, ascending triangle pattern. As a trader, as a professional trader, I was just looking for my break and enter right here, not looking at the overbought situation. I entered here, keep a stop loss below the EMA, take profit was 1.42 and $24. That's an insane amount of money if you enter the trades. Now, how can't you make money in the market if you are disciplined? Of course you can make if you're disciplined. I was instead bullish, and I keep on repeating that if you're broken above this high, the price is gonna shoot up. If you're watching my videos, then I keep on repeating that. With that, we have a ascending triangle pattern, and let me show you the last video where I've mentioned this pattern clearly. Gold is now forming ascending triangle pattern, as you can see right here. While I'm waiting for the break of this pattern, the break is very important, which we are waiting for now. If we are broken and close above, and close is important, not just a wicks, but a close is very important. If the price closes above or below, awesome. So that is how the price pushed up. Now that is why, again, the mentors are very important. If you want to learn something, of course you're going to go to the mentor. I upload these videos every day for you so that you know the direction of the market. Sometimes I'm wrong as well, of course. No one can be correct 100% time, but at least I have years of experience and being a profitable trader from years. I know what price action can likely do. That is why if you are someone who want to learn something properly, you need to have a mentor with you. Otherwise, you're going to just browse around and you can just go round and round. Now, right here, this was taken and that nicely pushed up. At this point, what I'm expecting, just a continuation out of gold after some correction. How we can calculate the correction? Right here with my Fibonacci tool. At this point, we can expect some pullback. It can now push up from 50 EM. It can push up from 706 retracement as well. But personally, I would like to wait at 50% retracement. That would be my buy limit order. Take profit can be 1 ATR, which can be a current candle ATR at this point is $11. So $11 can be initial target, and take profit 2 can be 1.618 retracement. That is something I'm looking at in the long term. 26.19 I'm looking at this target. But again, 1 to 2 ATR is enough for gold if you want to enter aggressively. And then if you want to manage till here, make sure you move your stop loss and trade risk free to break even if you want to wait till this area after hitting 1 ATR target. So that is what I'm expecting, a price to push down at this Fibonacci level, 50% retracement, and a continuation towards the upside. Pullback expected even with aggressive entry, or it could be a deep pullback and a retest of this level, which is 25.14, that goes to 25.31. If we have a retest followed by bullish engulfer, that will be aggressive strong entry. Or if we have a pullback above 50 EMA, wherever we get followed by bullish engulfer, I'm gonna go long. These are the entry conditions now I'll be looking at for my possible trades. Hey, on silver, we are approaching a level of major resistance right up there. 31.27 goes to 31.97. Once the price hit this level, expect some big and deep pullback. So I'll be looking at my bearish engulfers or double top entry pattern. Inverted hammers, 382 candle bearish is also something I'll be looking at for my possible trades. So that's what I'll be looking at, either pullback above 50 EMA, retest of this level followed by bullish engulfer, or deep pullback above 50 EMA. If we have that, I'm still gonna go long till the price is in this area to take my sell trade. So keep an eye. These are the conditions now I'll be looking at for my possible trades. Next up, we have crude oil, nicely pushed up, hitting the targets. Let's see a clip from my last video. Well, crude oil is now forming a possible double bottom minor pattern, and if this candle turns to be a pin bar or 382 candle, in that case we'll have a buy signal, and I'm expecting a price to push up from here. First target will be 180, and the bigger targets, as you can see, that looks something like this, and price will likely to head higher from here. And from here we can expect a possible rejection at 50 EMA, and then we can see a possible major double bottom. Awesome. So with this condition, price nicely pushed up and rejected from here. Now let me give you a heads up. It is a bearish engulfer, but it invalidates one of my rule for the pullback entry bearish. So I won't be taking it as a sell trade. Now there is a chance the price can form a major double bottom pattern back in this rejection area. Or if you look here, we are getting a possible head and shoulder pattern. Using some discretion, I'm going to mark my termination zone right here. Now if this termination zone is broken and the candle is closed above this termination zone, the price will likely to shoot up to 72.24, goes to 73.08, from where we can start to look for some good pullback and push down out of crude oil. For now, wait for the break above this box. Once we are broken above, either aggressively enter, or once we are broken above, look for the good pullback above 50 EMA followed by bullish engulfer till we are here to take your next sell trades with conditions only. So these are the conditions I'll be looking at. If you have a signal above 50 EMA or we are broken above this box, we are in buy. If the price just falls from here, I'll start to look for this area to take my next buy double bottom trades. Lastly, let's do copper. Copper is inside of major level of resistance. We already took this trade in the group a couple of weeks ago. Now it is back in this area. Now at this point, right at 4.942 goes to 4.29, 4.279 is an area the price is currently inside of and forming a condition. It's kind of double top, but we can still get a push up. If the price pushes up, forms a bearish engulfer or double top in this area, it is an area from where we can expect some good pullback before the price will push higher from here. So expect some good pullbacks from here, and once this zone is broken, only then I will turn completely bullish for copper. So that's it for commodities, guys. Hope you're getting value. If yes, give this video a thumbs up. I know that's a long video. If you made it to the end, you are a legend. Hope you do it green. I'll see you guys in the next one. Have an awesome weekend. Take care.